Well, here we are again talking about GameStop. The stock price rocketed 104% today, closing at $91.71 and even hitting $200 after hours. Is this a real short squeeze? Is it just a fake out? Is the Tendy Man coming to deliver you gains? Let's talk about it. As always, remember, I'm just a dummy with a camera on YouTube. I'm not a financial professional, and this is not investing advice. After the madness that happened late January and into early February with GameStop shares shooting up to a pre-market high of $513 before plummeting back down to earth just a few days later, things have been pretty calm and quiet on the GameStop front. Shares have been trading in the $40 to $60 range for the past couple of weeks. You've had congressional hearings with the legend himself.
I'm not a cat.
But otherwise, it seemed like retail has been left holding the bag. Then today, within the last hour of close, we started seeing a lot of buying volume come in on GameStop. Just look at this chart. GameStop opened at about $45 per share, and he had most of the trading volume in the morning as per usual. And then the volume starts picking up at 11:39 Pacific or 2:39 Eastern. The price starts pumping and the volume keeps increasing. Then trading got halted twice before market close, keeping many retail traders from both exiting and entering GameStop positions. Trading didn't resume again until after markets closed, with only after hours trading going on. The stock briefly hit $200 before falling back down to the $130 range. Let's jump to future me to see where the stock finished after hours. After hours, GameStop closed at $168.01. So the big question, what caused this spike? Obviously, it was this cryptic tweet by Ryan Cohen. Okay, maybe not. So last time we had the following combination. Over 100% of the available float, or the amount of available shares to trade, were shorted. GameStop had a low float with 54.49 million shares. We had bullish catalysts with Ryan Cohen and two former Chewy execs joining the board. We had retail mania helping fuel the ramp up, and we had a gamma squeeze. So this time around, what's different? Well, as far as we know, short interest is now at around 40%, still high for a stock and, according to highshortinterest.com, the most shorted stock, but far less than what it was previously. Then yesterday, GameStop announced their CFO is resigning. They are currently looking for his replacement, someone with the capabilities and qualifications to help accelerate GameStop's transformation as they look to shift away from physical towards digital. I think most people who are bullish on GameStop would consider that replacement a good thing, but also not quite the catalyst to cause this sudden buying surge. Let's take a look at options flow. This shows us large orders of options contracts that are being purchased. I'm looking at this data on TradyTix, which is an options flow platform, and I'll link to it in the description below if you want to check it out. We have $8.34 million spent on options premium for call contracts expiring this Friday with a strike price of $60. Also expiring this Friday is $5 million of call contract premium with a $50 strike price. This brings us to the gamma squeeze. I don't want to overcomplicate things, but I also don't want to underexplain things either. But here's the basics in case you don't know. A gamma squeeze happens when options contracts that were previously out of the money expire in the money. So if you bought a $50 call at the beginning of the week when the stock was at $40 and the price goes up to $50, well, your call is now in the money. The party that sold you that contract is generally a market maker. They provide liquidity in the markets. So since they sold you the contract, they need to hedge this trade so they don't lose money. They can do that in this case by buying the underlying stock to mitigate the risk associated with selling you a contract. When there are a lot of contracts that all of a sudden become in the money, it's possible market makers still need to hedge their risk and then buy shares of the underlying, which could contribute to GameStop's share price going up. But implied volatility on GameStop options has been pretty high for the past month. This makes buying contracts expiring this week A, very expensive, and B, not as enticing of a YOLO play like it may have been a month ago. When it happened in January, you had a perfect storm of Wall Street bets buying shares and cheap out-of-the-money call options expiring the same day. The market makers continue to hedge their positions and the price continues upwards. It doesn't really seem like that's what happened today. So what else has changed? Well, Wall Street Bets over on Reddit has now over 9 million members, and I'm sure there are plenty of people who are new to trading and may be looking for the next GameStop trade, and well, here's GameStop again. The GameStop surge at the end of the day likely caused an overload on Reddit's servers as the whole site went down for like 30 minutes or so. I'm not sure if we'll see the same retail frenzy as before since a lot of people got burnt and lost a lot of money, but anything is possible. We saw Roaring Kitty, or Deep Value, make another update on February 19th showing he doubled down buying 50,000 more shares of GameStop. He really does like the stock.
As for me, I like the stock.
But that was last week and wouldn't explain anything other than providing retail bag holders with a glimmer of hope. Could it be whales and hedge funds squeezing out shorts who are still in? Possibly. Could the short hedge funds have covered up their positions in other ways to make everyone else think they covered? Sure. Could funds just be running the price up to trap GameStop bulls in even more before bringing the price back down to earth again? I guess so. What I learned from the last short squeeze is that we don't actually know that much about the inner workings of the market and how big money really operates. Sometimes retail gets a win, but for the most part, we are just pawns in their money-making game. I've yet to see an explanation for why GameStop shot up today, and I've been trying to figure out what's going on, but I really haven't been able to come up with much. After seeing the shenanigans with the DTCC and their increased capital requirements from brokers, it's never been more clear that the chips are stacked against retail traders. So many people got left holding the bag on GameStop earlier this month, and I really don't want to see that again. As for me, once I started seeing the volume come in at the end of the day, I did do a few quick scalps on GameStop for about $2,200 in profit. Look how I just sold those 1,000 shares at $62. Would have been nice to hold obviously, but I had no idea. I did, however, buy 4 call options expiring this Friday with a strike price of $200 16 minutes before the market closed. I was planning on just selling them for a quick profit, but since the stock got halted into close, I'm holding on to these and I'm not super mad about it. These are currently up 400%, but it will all depend on how things open up tomorrow. And now obviously I don't know how things will end up with this, but I know it's risky. I've put $2,660 at risk for a pretty juicy potential reward, and if things go south, I can exit at a loss and be okay. If you're in GameStop, I hope you make money from this spike. I'd love to see this stock moon and for all retail to walk away with pockets full of attendees, but just know that someone has to be left holding the bag, so you better make sure it's not you. Just please be cautious and don't get greedy. If you're not in GameStop and you're feeling that wave of FOMO start to wash over you, it's okay, it will pass. And it's much better to feel a little bit of FOMO than it is to lose your rent money or your entire life savings by rushing it into something without really understanding it. The market always provides opportunities, and it's okay to let GameStop pass by. If you do want to get in, please tread lightly. We've seen how volatile GameStop can be. Do not, under any circumstances, risk more than you're willing to lose because you can easily get wrecked. And please do your own research first, because remember, this is not investment advice. So the bottom line, honestly, I don't know. I am trading GameStop, but only with money I'm okay with losing. It'll be interesting to see where this goes for the remainder of the week. So if you would, do me a favor, hit the thumbs up button on this video to turn it into a rocket sending GameStop to the moon. Consider subscribing if you haven't already, and I will see you in the next one. Bye.